Rebecca, this is a developing story. Where are we with this, and how bad is the contagion?
Yeah, I mean, this is a pretty extraordinary thing we're seeing. So bonds at Huarong, which, as you say, is one of China's four kind of central state-run bad loan managers. It's a cornerstone of China's financial institutions. Some of the bonds there, the perpetual trading as low as sort of 65, the other bonds in the 80s range, definitely in sort of stressed, potentially even distressed territory for what is an investment-grade A-rated company. I think, folks first sort of started to be concerned about the financial health of Huarong when it failed to make the March 31st deadline for its earnings. And since then, the kind of absence of information and absence of clarity over what's happening has really stoked investor concerns. Huarong's kind of systemic role in China's economy and the potential that the state may not step in to save this central SOE, that potentially kind of undermines a lot of what folks think about the China market. And that's really why people are so worried. And that's why we're starting to see these signs of contagion spilling over into the broader market.
Like you said, Rebecca, we're seeing some signs of contagion already. Just how ugly could this potentially get?
Well, so far, we're seeing Asia, kind of spreads in the Asia IG space widen about 3 basis points. We're seeing in China high yield a little bit more weakness. Some of those kind of property bonds and the weaker China high yield sort of junk rated companies, those are falling by record drops. So we're already seeing quite a lot of weakness play through. Potentially, this could get much worse. I mean, if we see any kind of doubt into the fundamental question about the level of state support that Chinese firms can continue and expect to see, that when we see an investment-grade central state-run firm, that kind of its guarantee of support of its debt come into question, that has enormous implications for the rest of China's market, but also the Asian credit market.
And ultimately, Rebecca, it's moral hazard, isn't it?
Yeah, absolutely. I mean, that's the sort of, I think that's the fundamental thing here. And it's worth bearing in mind that Beijing, since sort of its economy has improved after the pandemic, has resumed its campaign to allow more firms to fail. And of course, we have seen defaults coming up in among sort of state-linked firms. Going back to November, we saw Yongcheng, that kind of coal state-run miner, and that has already kind of thrown off the market. And so, the other thing to bear in mind is there's already a little bit of nervousness here. We've already started to see some of these missed payments and mounting stress at state-linked firms. And China Huarong, any kind of financial restructuring would be really sort of impactful and quite staggering for this market.